Hey, I'm going over this with you guys because lately we've been talking to more people at Bell Capital, and we're like, dude, you have to know who has your money. Like, who's got your money? That's number one with anything. And I'm going to go over the same line of questions that I go over with some of the people who want to invest with us to just kind of find out if they're even qualified to invest with us at Bell Capital. Like I said, because we're dealing with real estate. Real estate's our vehicle, multifamily real estate. But if you're going to make an investment, a lot of people don't even know where their money is. So, number one, we always ask people, like, how liquid are you? Like liquid meaning cash. Liquid. Boom, I draw the cash. How liquid are you? And that's going to be like, how much money do you have in like your checking account, your savings account? So you want to be able to go down the line and really find out like who's got your money. Most people don't know. They know one piece. So let's say, well, how liquid are you? And they will say, well, I got $300,000 in cash. So $300,000 in cash where? Like, well, we have it at a bank at a high yield in a high yield savings. So it may be at a bank, right? So maybe a bank savings, maybe a CD. They may be getting like 2 to 4% on a CD, whatever, right? Cool. All right, got it. So let's say they have 300K. We'll stick with that because the average person that we talk to has 300,000 to $1 million liquid ready to invest. But we'll go average on the minimum side for the people that we deal with. So that's money in the bank. Everything I'm saying, you should be asking yourself this question. How liquid am I? How much money do I have? So we have bank savings. So play with me on this one. So how much money do you have? How liquid are you? That's in bank savings. Next, we ask people, okay, so how much do you even have a retirement account or a 401k, IRA, money sitting dead, right? So let's say a 4 IRA, 401k. 401k, or you could have a 403b, depending on what you do in life. You could be a teacher, you could be a doc, whatever it is. So then they'll say, yeah, you know what, Vic, I have. They didn't really think about that because that's not money. So that's not money they can get after. Let's say they're 40 years old, and that money's really going to be. They've already submitted that money and they've already dumped it off over there. They can't touch it. If they're 40, they can't get at it until they're, let's say, 67. So they'll say, yeah, you know what? Yeah, I have $300,000 liquid I can play with, but I have another $400,000 cash sitting in an IRA, 401k that's dead. They can't do it. They've already done there. All they got to do is redirect it. So I'm like, hey, is this self-directed? Is it a self-directed or not? They'll say yes or no, right? Because we can help them with that. If you have an IRA, you're interested in investing in real estate to be able to to be able to self-direct your money that's been sitting in your IRA 401k, you can self-direct that without penalties. Meaning like you're not going to get penalized for doing that. You can do that in a qualified asset like real estate. All right. So next I'm like, okay, cool. So you have money in your IRA. What about stocks? Most of the time their IRA is tied to the stock market and or some stock, one or the other. And they're like, yeah, I have about $2 million worth of stocks. Let's say they have $2 million in the stock market. Okay, good. So what about a home? Do you have equity in a home? Home equity. I'm losing my pen. I got another one though. Where are we at? Good. So home equity. And they'll say, yeah, you know what? We bought a house. Oh yeah, this is a way better pen. Equity. Boom. Let's say for their home, they have I don't know, $500,000. They have $500,000 in their home equity. Did you guys know that like and I'm going to run some math. This is why this is important. You have to know who's got your money. Right now, the bank's got your money. Bank of America may say, yeah, we'll pay you 3% or 4% or 6%, whatever. Like you aren't going to get that anyways because you're going to get taxed on whatever that gain is. And oh, by the way, if you're locked up in a CD or a high yield savings account, they're going to adjust that high yield savings account on your money throughout the course of the year as rates change, period. So let's say you're like, so there's $10 trillion, $10 trillion sitting in bank savings. It is across the board. There's $37 trillion. I'm going to write this down. You got to understand where your money is and how it's just sitting there. It's not serving you because you aren't getting the benefits of it. The bank is, right? Or Wall Street is. We'll go back and forth on this. This is what I point out to the people that I talk to. I'm a little bit more animated when I talk to you guys on YouTube or Facebook or Instagram. But like when I'm sitting with them, I'm really like fact finding. Like, dude, let's find out where all your money is. There's $37 trillion in retirement accounts. We'll just leave that as retirement. IRAs, 401ks, right? Traditional IRAs, Roth IRAs. There's $47 trillion there. There's $10 trillion in bank savings in the banks, right? There's if I'm not mistaken, there's let's see, I want to say there's about $8 trillion in money market accounts. That's liquid money. That's how much money is sitting out there. There's money just sitting. There's 10 trillion, if I'm not mistaken. Is there 10 trillion? No, I'm sorry. There's another $10 trillion from money market accounts. This is combined banks and money market accounts equal up to roughly about $20 million, right? There's another $10 trillion sitting in I'm sorry, what was I talking about? 37. 37 trillion in equity, in we call it trapped equity. So let's put what it is. It's trapped equity in homes. That's why I said don't buy a home. Because here's why. If you have equity sitting in your house, you can't tap that equity unless you go and get a new loan. If your loan was 2%, like most of the loans, like 80% of the loans in the United States right now are below 4%. Those houses are not going to be for sale if the rates are at six, six and a half, six and two quarters, six and a quarter. No one's going to go and get there and resell. Matter of fact, 50% or maybe 40% of some of those 80% loans are at 2.75%. They're not going to turn around and sell that house or cash that house out for any reason. So this trapped equity, $37 trillion of trapped equity is sitting in homes unused, wasting away as prices of homes lower, right? So it's $8 trillion sitting in money market accounts. What does this mean? People are afraid. They're like, dude, I'm not getting my money out of them. I'll take the little money that I get, my little 4%, 5%, whatever it is I'm getting, and I'm going to hold on to that. It's liquid, but I'm going to do that game because I don't trust myself enough to go out there and make my own investments. There's $10 trillion, same reason for this, because money markets are just as liquid as your bank savings or a CD sitting around and waiting, right? The bond market, we won't go into the bond market, but the stock market itself, the stock market, that's if I'm not mistaken, let me see. I actually have it written down here. This is a $150 trillion industry. The bond market is about 140 trillion. That's how much money, boom, is sitting around. That's just some of them. That's not even all of them. Did I write down anything else? This is why I said you got to know who's got your money. And we talk about gold. Gold is, I think, at like $15 trillion market, a market cap of that size. Cryptocurrency, Bitcoin, and all that stuff, that's still pretty small. That's only 2 trillion. It's not even caught up with the rest of the world. But if you just think about your money, if you're looking to invest, you go, Vic, I want to invest money. Where's all my money at? You need to do a freaking, what is that called? Like when you go to the doctor, they do a freaking, they do a cavity search. They do everything trying to figure out exactly, dude, what is wrong with you, right? And if somebody if they do a diagnosis without basically doing an evaluation, that is called what? Malpractice. So when I'm thinking about anybody, I'm like, dude, first, let's get clear. I want you to be an investor. I do. Where's your money? And they go, well, I got some money in the bank. Good. That's awesome. So how much is that? How liquid are you in there? Good. Do you have money in an IRA? How much of money is in an IRA? How much money do you have in stocks or bonds or gold or anything like that? How much money do you have in a home, in a house? Right. Next, I'll say, have you ever invested passively with somebody else before? Have you done all your own deals? You got to find that out too, right? Like you need to know where you sit on this thing because you're going to follow along the lines. And me and somebody were talking about this the other day because we were watching a training and they were asking like, what kind of investor am I? Right? And you need to know, are you somebody with zero money? Are you somebody with a little bit of money to invest? Are you somebody with money plus time because you want to do your own deals? Or are you somebody who just wants to passively invest? Passively invest and get cash flow plus the bonus, plus all the bonuses. You need to know who you are. Because if you're a person that has zero money, right, or credit, and this right here is if you want to do it on your own. But for the most part, this is the person that makes the most money in these deals. But you won't know whether you can invest at all unless you know exactly who's got your money. Right here, if the bank is sitting on your $300,000, you need to know that. What is it that you can do to make more money on your returns than 2 to 4%? When we look at a deal, I'm always looking for, hey, could we hit 5% return on our money over a long period of time and then later double or triple? I want to double or triple my money every 7 to 10 years. If we can do that, I'm always going to beat whatever the IRA is. Let's say your money's at Fidelity. Let's say that Fidelity's like, we're going to give you 8% return on your money. They're going to adjust this 6 to 8%. They're going to present to you 6 to 8% return on your money over a long period of time. But that's a presentation. They're going to give you that because they're going to say, hey, over 75 years, we've averaged 6 to 8% return. They're going to carve out the years that were bad years. So you may or may not get that. And I mean, let's face it, you've heard me talk about it before. This is what I share with people with money sitting trapped in an IRA 401k. Let's say that with 401k there, they don't work there no more. It's dead money. It's just sitting. It's dying. It needs to keep up with inflation. Inflation, I think right now they're at 3. They were excited about 3. They're saying it's 2.6 or 2.8 or 2.9, but everybody's worried right now because the war is going on. Gas prices are crazy. Bitcoin has dropped all the way down. The M2 for the amount of money that's in the world is skyrocketed based on the US and the Fed. Like there's a lot happening right now. And you need to know that if your money is sitting in an IRA or 401k and they're telling you it's going to be 6 to 8%, you can't create wealth off 6 to 8%. If you're 40 years old, your money is going down. We've talked about it a lot. For example, aside from me saying which type of investor are you, let's get that, let's move that out of the way. Let's say you're the person that wants passive investment. This is the graph for the dollar. Like I said, this is the graph for the dollar. Boom. This is the dollar. The US dollar has been going down. Boom, 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 boom. Since 1973, the US dollar has lost 86% of its buying power, of its BP, since I've been alive. I'm 51 years old. No, yeah, 52, whatever age I am, 52. But like since I've been born, I was born in 1973. The dollar has lost 86% of its borrowing power. So if you had $1 million in your IRA account today, you've already like your buying power is only 800 and whatever that is. I'm sorry. It's like 2,200 grand. Like that is the difference of the way the dollar worked. You've already lost 86% of your buying power. I reversed it because my brain wants to go up because that's how I think. I think this way, not this way, because this is scary to me. Inflation has continued to happen. Since 2019 to 2019, 2020, like during COVID, the dollar lost 20% of its buying power. So if you had $1 million sitting in an account, you lost $200,000 in buying power of that $1 million. It only buy you like $800,000 worth of real estate or worth of goods. You need to do and invest your money if you're in put it in a place where it's going to keep up with that. All of our deals, we're looking at 5, 6%. We're looking at 15 to 20% on our money, 25% on our money over long periods of time. But you won't get that if you just leave it in an IRA, which is why I explain to my people. Next, same thing. Like stock market, you have such volatility in the stock market, it's not funny. Every day you wake up, something's different. We have President Trump saying, "Hey, we're out of here. We're leaving Iran." Oh, wait, by a second, these guys are jacking around. We're gonna cut off the Straits of Hamas, and all of a sudden, skyrocket dump. We call it the Trump and dump. Anyways, it doesn't matter whether you like them or you hate them. That's not the point. The point is this: it's $150 trillion market that you can't win that game. You don't want to wait. If you're 40 and you're gonna hope to retire in a certain amount of time and you're playing the stock market game, you may get out with nothing. So, like my guy that had $2 million in the stock market, every day he probably can't even look at it. I would be sick to my stomach. Wake up, I have $2 million in there. Next day I got a million. Next day I got to make a million back to get back to 2 million. Now I'm at zero, and I got like that's too much. And for your home, the neighbor, like we live, the home we live in, the houses in my neighborhood sell for a million, million and a half. If my neighbor sold, and I know they can because most of the people that live in here are renters, that person owned that property for a long time. Let's say they're going to sell for 1,200,000, and this one's worth 1.5 million. That's $300,000 loss that I was sitting on, hoping that this $500,000 was valuable to me. I lost $300,000 or 200,000 just because my neighbor has more wiggle room than me. But that's not the way you play the real estate game if you're going to do real estate, because we do commercial, multifamily is based on its income. Totally different. So, what does that mean? You have to know where your money is. I know I go over this a lot, but if you think about it, let's just do your own financial your financial analysis. How much money do you have sitting liquid right now? How liquid are you? Like, where's that money at? So if you go, hey, how much money do you have in the bank? Bank savings, CD, retire, like whatever. Next, how much money do you have sitting in an IRA, 401k, or a retirement account at all? Whatever it is that you have. Cool. Once you figure that out, you're like, hey, can you self-direct it? Because if you can't self-direct it, then it's not, qualifies for it. Then that's something you should be able to look at. Next, how much money do you have sitting in the stock market? Cool. Stocks, bonds, gold, crypto, like currencies, whatever it is that you trade. Like if you have money just sitting over there, you need to know that. Next, how much money do you have sitting in home equity? Right? Like how much equity is sitting in the house, dead, dying, not serving you, not serving your family. Because the fact is like you don't need all of this. You need a vehicle that gets you where you want to go. And I'll say this because most of the business people that I talk to that have a business that are successful, we focus on a couple of things when we talk about investments. All right. So number one, this is how you create wealth for you and your family, right? Using what you got, using the money that you have. So you're going to put your attention on number one, you're going to put your attention on raising revenue, right? Or income. That's number one. Number one. People are always going to be like, hey, I need to raise my income or I need to raise my revenue. Period. End of story. How do I make more money in my business, my company? If you're a high paid employee, like a high net worth employee at maybe you're a doctor, you work at a practice, you have a firm, whatever. You're going to be like, hey, how do I get more? How do I do more? What does that look like? Number two, you're going to focus on passive income. This is how you create wealth, folks. While you're doing this, you're going to focus on this. You're going to focus on how do I create passive income for what it is that we're doing? All right, make sure I didn't lose you. All right, so that's number two. These are how wealthy business owners, entrepreneurs, the elite business people, this is what they focus on. There's three things. I was going to do like that. It's weird. Three things that they focus on. Number one, they raise their income or their revenue in their company, their business, or whatever. Next, they focus on investing passively in something that pays them. So they get their money working hard while they're working hard to continue to do this, right? And then next, number three, they're focused on equity. For example, like when we do stuff at Bell Capital, we find the deal, fund the deal, manage the deal, manage the management company because we use third party property management, and then you get a piece of the passive income and you get a piece of the equity because you're an equity partner in the deal. It's a private equity fund. So this is how you do this. Now, some of my business owners they'll be like, "Hey, man, I want to invest with you because we want passive income because they're raising their income in their business. That's not passive. This is full active income. This is active. They're going to focus on active income." So number one thing is always, hey, go make more money. Number one, go make more money. Go build, go create on your business, go create on your idea, market, sales, expand, hire more people, push, drive, shove, drive. Next, you're going to focus on passive income. You're going to take that additional money that you have after you pay your bills, 40% to taxes, 40% for you, and all the other stuff, and take care of your employees and your staff and your expansion. You're going to push everything you have left over into number two, your passive income investments, whether that be with me or on your own or with somebody else. I don't know. But Bell Capital is probably where you should do that, right? So then you're going to get the benefits of cash flow, the tax write-offs. You're going to offset the money you get from your passive income, and it may spill over into your other active income from your businesses. That's why you want to do that. As well as you got leverage, you're not doing the work, you trust the person you're with. You always got to do that. Last but not least, later, what I talked about earlier, you want to get that double up. You want to double. I want to double. Everybody wants to double on their money. So later you get equity, right? So like you're going to get your cash flow, you're going to get your cash flow while you wait, and you're going to get your money back, whatever you invested. Say you invested the 300, and the target is later when we sell, you get another 600 over the top. You get 300, you get 300 back plus 6. You want to double, right? Well, that's a triple, but you want your 300 plus another 300, which gives you 6. And in this situation, if you want to, let's go. Let's go. You'll get 9. Let's do that. I would love to do that. If you invest 300K with me and then later we turn around, I give you your money back. I sell, I give you another 600,000. You got your three, plus you got six, you got 9K. Your 300 turned into nine. That is the ultimate game here. And it could be infinite. I don't know. In that situation, it's infinite because I gave your money back. But this is what my guys focus on. And I talk through this fast because I get excited because this is how wealthy create more wealth. But you got to know the first thing that I talked about. Who's got your money? Does the bank have all your money sitting over there, paying you nothing? You should be pissed about that. The bank lends your money out 9 times and gives you nothing while you sit and you wait and you schlep it out at your business. Here's your money trapped at Fidelity, Vanguard, BlackRock, one of these other places, the Schwab. You're never going to meet Fred over at Fidelity. That's not, even the people at Fidelity don't meet people at Fidelity. That money's just sitting over there. You get to play with it or not. It's tied to the stock market or it's not. The stock market, that's the volatility ups and downs. I didn't even go over Bitcoin and crypto and stuff like that. I'm leaving that out. That's still a part of the stock market. It's still trading currencies or whatever, bond market. All of those things have everything to do with that. Maybe your money's there. Maybe Wall Street has your money. The Wall Street casino, the up and down volatilities of your money, and you're just hoping and praying when you pull out of the bubble, building your company, working, trying to take care of your family, that your money's still there at the end of the game. Or last but not least, you bite the carrot, you bite the apple that the traditional world told you to do was like, your mom, your dad, mine's too, buy a home. That's going to be your greatest investment. It's not. Your biggest investment is going to be an investment. It's not going to be a home. Your home and your trapped equity is not for you. It's still the bank's equity until you pull it out and use it. Money is to be invested and multiplied. It is not supposed to be sat on and held. So I hope this helps you guys. So, like when I try to talk to people, a lot less. I'm not answering for anybody. I'm like, man, how liquid are you? How much cash are you sitting on, and where is that now? How much money do you have in savings? Like, you need to know these things. If you do this exercise where you're like, hey, Vic, I sat down and I went through this video with you, and I was like, where's my money right now? My money's in the bank savings account. I got a good bank savings. I'm over at Bank of America. I'm over at Wells. Over at Chase, like wherever you are, right? Wherever you're doing, some credit union, because you're whatever you're the teacher's credit union, the doctor's credit, like whatever it is you use, or your money's in the stock market, or your money's trapped in a retirement account or IRA, and you just kind of already surrendered your money, and you need to redirect that money into cash flowing institutional quality real estate. That way you can actually earn more on that money. You can actually get the rewards of that money being there. So when you're 67 or whatever now, like you want to take an early retirement, you can do that. You'll take penalties on that, but you need to know where your money is, right? Or is it trapped in your home? Because you bought the story that a home is a good investment. It's not. So you need to make those decisions, man. I'm telling you, I'm here to help. I really am. If you want to do anything with us, go to bell-capital.com. You can get more information about what we do. You can fill out a form there, and one of us will contact you. Feel free. You can directly text our office or text, and I will get it, 760-531-8500, or you can text me directly, 8080, I have a Hawaii number, 808-778-1326. That'll come right here. Trust me, I'll get it. And I will talk to you. I'll either direct you with someone on my team, and we'll find out if you qualify to invest with us in our current fund. Gotta have a great attitude. That's first. Gotta love the idea of real estate, positive cash flow, um, tax benefits, leverage, long term, right? And you got to be accredited. Right now, you got to be accredited. The way that we're doing it is you got to have a minimum of $200,000 to invest, which is why we're talking about 300,000 to a minimum. We have a few slots slash spots left in Fund One, and then we're going to be moving on to Fund Two. But I definitely want to have you. This is going to be the best buying opportunity for real estate for you to get involved in. I want to do that with you. That's why we set up Bell Capital the way we did. All right. Um, any questions for me, leave them in the comments. I always answer them. I get to them. Somebody, myself, I always answer them, or somebody on my team will bring them to my attention, and we'll do that. If you want a video that you want us to make specifically, I will make it. I'm here for you. Any way I can help, let me know. Like this video, share the video, comment on the video, leave me a thumbs up or give me a thumbs down. Don't be a hater and a hider at the same time. I love you both. I need you both, but I'm here for you. Let me know how I can help. I'm here for you, seriously. All right, let's get after it today. Boom.